That was a little remarkable to me, and I could only think that it was maybe taking some risk off in the part of the funds.
Well, hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you, and it's Friday, so that means we're going to put the wraps on another trading week. And as we head into the weekend, we'll take a look at what happened in the grain markets, kind of a whipsaw type trade during the week. We'll also dive into the livestock trade for a little bit. And as we got to the end of the trading week, we actually got the new cattle on feed report numbers from USDA. And it was after the markets closed. The trade won't be able to react until Monday. So that should be interesting. We'll get to that in just a little bit here in this podcast. I want to bring in Relph of Comstock Investments. We'll analyze what took place in the grain trade. It was like the old saying, Eric, I like to say, it's like pushing a rope uphill. You just couldn't get much accomplished in the grain trade. It just kind of went sideways and chopped around all over the place. I guess the only gold star maybe on Friday would go to the wheat, and that wasn't a very big one.
Wheat on Friday, corn on Thursday, pick your poison. It's just been kind of position squaring, which surprises me a little bit because, we're still, 6 sessions away from the quarterly stocks and prospective planning reports on the 31st at 11 a.m. So we have one full week of trade between now and then. And it seems traders are already pre-positioning for those reports as you're starting to see money come off the table, whichever case it may be, whether it's long or short, depending on what particular category you're talking about. But then you've got a lot of other influencing factors coming in this week. And it's just been, for the amount of input we've had on the news wires, we've really seen pretty minimal movement in the markets. Export sales for corn were fabulous this week. Everything else was garbage. And the soybean oil, you look at usage for biofuels in the month of February versus year ago levels, cut them in half. I mean, it's just terrible stuff. And the market able to sustain decent trade through that stuff. Obviously, the corn had those positive inputs in addition to the export sales that we already talked about. You also have Brazil having some weather issues in the Safrina regions. They're looking very dry, very problematic right now. However, you look at a 10-day forecast and it looks like all will be well by the time you get to that time frame. But moisture begets moisture. They have nothing. Maybe it develops, maybe it doesn't. Time will tell.
What about longer term outlooks? And when it comes to the grain markets here, anything that you're keeping an eye on?
I am. I'm titled my broker comments for our premium subscribers yesterday, is a break in wheat warranted? Because personally, as you well know, I'm not a fan of wheat. I just look for opportunities to sell it, and we really haven't had any of those. But right now, given all of the fundamental inputs that I can put together myself, being from Western Kansas and having contacts throughout HRW country, and looking at the reports that are coming out of Russia, Ukraine would offset some of that. The reports out of Ukraine are fairly supportive for what they have in the ground. And so there's a little bit of give and take, but all in all, I think the fundamental storyline is very supportive for HRW wheat specifically. SRW would just be in tow as a result. But there's a lot of different things you could point to, whether it's winter kill, wind shear, dust shear, continued cattle grazing. A lot of that wheat may not ever be harvested. There's a ton of things you can look at on an individualized basis that impact that market, but it takes time to get there. And now what I guess really caught my eye recently was the fact that we've got a 60-day drought outlook, and it's not very friendly. I'm going to pull that up real quick, and you can see here, there's just kind of a bullseye right there in HRW country. The entire Western Corn Belt has its own set of problems, but this data is projected from NOAA through June 30th. So it's basically the next 60 days. This doesn't look overly friendly to growing wheat to me. So the idea that they could continue grazing and then we could have some yield issues in the Western Corn Belt, all of this kind of adds up to me that maybe there is a story, a more supportive storyline overall, longer term.
Well, now that's interesting. That should cause some caution on the Corn Belt as well, I would think, on the western part, right?
Especially when you're looking at acreage expansion, because acres don't expand in Illinois. They don't expand in Iowa. They expand in the Dakotas. They expand in Nebraska, Kansas, what we often refer to as fringe acres. That's where you get acreage expansion. So if we're going to expand the corn acreage number for this crop season, for this growing season, you're likely going to see a significant yield reduction versus USDA's anticipation as of now. So what does that number look like? Are we talking a 176 and near record, or are we talking 174? Nobody knows, but obviously we have the entire growing season ahead of us. You have to assume it's going to be a lower number when you're bringing in marginal acres at a time when things don't look real promising.
Well, and you and I are both from the plains, and you know as well as I do, it's rare, if ever, that you have back-to-back years that have the same general pattern.
Mm-hmm.
And I'm talking climatologically speaking here. And you guys had all the flooding in northwest Iowa, the northwestern part of the Corn Belt last year. I would bet you dollars to donuts you're not going to have flooding again this year, anything like that. If anything, maybe the script would flip, and that would fit in with that map you were just showing there. That worries me a little bit.
Oh, absolutely. I mean, you're not talking about insignificant ground when you're talking about Minnesota, extreme eastern South Dakota, and northwest Iowa. The northern three tiers of counties in the state of Iowa have the highest production ground in the state, and we all know Iowa has the highest production on a percentage basis. So it's just remarkable what kind of impact that could have if you have virtually everything. And immediately near the Mississippi, they're anticipated to be in a little better shape, but virtually everything west of the Mississippi having some degree of difficulty. If that pattern continues and that becomes reality, big deal.
Wow. Have we done anything technically on the corn or the soybeans to maybe tilt your opinion on what we may do as we get past this prospective plantings report?
And no, not to speak of. I've been struggling with several things here. And really, the May corn today down 4 3/4. You're just continuing sideways, and I know that my chart is a little bit cluttered up here, but just continuing sideways since we made the low back on March 4th. We did try to rally out, and then we've just right back into the middle and grinding sideways. Not a lot of action in the corn. Similar story in the soybeans. You make the low on March 4th. You try to rally out, you break right back, almost challenge the low, and then grind sideways for a week and a half. Just nothing to really move the needle in the row crops. I think it has to be sheer anticipation of what's going to happen when we get to those reports on the 31st.
You and I were both at a meeting in Des Moines here a couple of weeks back, and I thought it was interesting. I asked for a show of hands from members in the audience how many had sold over half of their corn crop from last year, and the vast majority raised their hand. And then I said, all right, how about 75% sold? And most of them kept their hand up, didn't they?
Oh, the majority,
I'm impressed by that.
Yeah, I think everyone, once we had settled back off of the highs and everyone saw how bad the prices could be, they took advantage of every rally after that. There was quite a bit of old crop moved.
Well, I tell you what, as we're recording this is on Friday, and we're recording it right after the markets close. And as we're speaking, we're now getting the new cattle on feed numbers in. I see they're just coming across the wire here on my terminal. Let me read these off here. So it says the on-feed number as of March 1st is coming in at 98%. The average trade guess was maybe a little bit higher than that. Looks like placements in February were at 82%. That might be a little bit light on the placements compared to what the trade was looking for. And then I see where the marketing's number has come in at 91% of a year ago, and that's roughly about a full point under what the trade was expecting. What do you think that means for next Monday's open, Eric, considering that we sold off a lot in the last hour of trade today?
Yeah, that's a little tough. Okay, so the why of it. February, we had sale barns widely throughout the cattle feeding regions shut down for one full week. A lot of them shut down for 2 weeks. And so we knew the numbers were going to be light. Then you take into account that last February was the largest month of the year for placements. So when you're comparing to the largest month of the year, even a normal February would have been something like a 93, 95, something like that. But then you take off a week to 2 weeks, depending on where you're at, because of frigid temperatures and adverse weather conditions. They didn't want to be moving the cattle. Now you drop that down to the trade was expecting 85.6 and we come in at 82. Uh, Quite bullish. The numbers are light. Cash trade today busted loose about, I'm going to say around 10:30 or 11 this morning. I was getting text messages from clients just sold for 210. And then he said backed off, waiting to see if I can get 212. Got 212. Later I heard 214. Later I heard 215. I heard 335 dressed. Then I heard 340 dressed. Southern Plains selling at 210 live. The cash market was absolutely on fire in all four reported regions in a negotiated manner while the board was collapsing. And that was a little remarkable to me. And I could only think that it was maybe taking some risk off in the part of the funds prior to this cattle on feed report, because what if it doesn't live up to expectations and then comes out and blows it out of the water? So this is pretty remarkable. I'm a little surprised.
So the thing about Friday's trade in live cattle was we created new historic all-time highs in that nearby April contract on live cattle. But then we hooked around, and in the last hour of trade, we cut off about $2 off of that. And so actually, I guess it was an outside, it'd be an outside down day, or I guess it'd be a lower close after setting a new record high. I don't know what you would call that, a hook reversal, or what is that? Technically speaking, that wasn't the best look, but now maybe this report would offset that.
Yeah, I have to think when you look at this April chart, which I mean, it looks terrible when you leave that kind of a tail up there. You've got an intraday reversal, finish sharply lower after trading so much higher. Traded that April all the way up to 211.12 before finishing at 206.95. So really nasty look when you just glance at it. But I think this report has to offset some of that. When in conjunction with the higher cash trade that we saw this week, you have to kind of shrug off the technicals and say, okay, the numbers aren't there. They're paying up for the cash. The Packers are short bought. Here we go.
What do you think that means for the relationship with the feeder cattle then?
Well, I've been kind of caught off guard by that relationship that you're speaking of, because to me it seemed like for quite some time the feeders were well overpriced, and just looking at the dollar spread between live cattle and feeder cattle, and then over the past week I kind of went back and did a historical study and was looking. And generally speaking, on a ratio basis, the feeder cattle run 1.2 to 1.4 the price of the fat cattle on a front month basis. And right now we're at a 138. So we're within reason, within the range of quote unquote normal. So I don't know that anything really needs to be suffering here.
Any thoughts on the hog trade today as we wrapped up the week?
I kind of had the impression that it was just nothing more than a little profit taking in the hogs. We did see, again, July made a challenge of $100, got to 99.72, finished $1 off the high. This was, it was an outside, or it was a higher high, higher low. But we just we challenged the bottom end of yesterday's range. We challenged the top end of the week's range. We challenged the $100 mark. We uncover more hedge pressure. Really tough to figure what's going on here. We do need to see the front month improve a little bit. April's still lagging cash. But if we're back up here in the top end of the week's range, then we're fine. We're where we need to be versus the cash. So I don't expect any major movement there. So not a lot to write home about. Weekly export sales were pretty poor, like so many things were this week. Wait and see.
All right. Well, all in all, it still makes me nervous about at some point you would think there would have to be consumer resistance at the retail beef counter,
So this is the part I can't reconcile this. The Packers are paying $340 dressed in Nebraska today, and we've got choice cuts at $324. That doesn't work. So there's some things got to figure themselves out, and it's got to happen sooner than later. But this cattle on feed report shouldn't put too much pressure on the market. Again, we'll have to see what kind of tricks they can pull out of their sleeves.
But you'd have to be very careful about your marketing plans, right? If you're buying feeders, and trying to sell live cattle. If you're going to do hedging, you better make sure you know what you're doing for your corn input price, right?
Yeah, all your inputs have got to be well under control. You've got to be raising cattle that are going to give you some grid premium, something to juice this thing a little bit, because frankly, you can't pencil it otherwise. And for custom guys, if you're paying yardage and feed and vet bills and transport and everything else that goes along with it, becomes impossible. And so you've got to have some way to figure out how to get this under control. And again, I just keep thinking the beef remains at a price where consumers are continuing to buy. And I don't know what kind of numbers it takes to repalletize a population, but you have to think that that's what it's going to take to break this thing. And eventually we will get there if the numbers continue on the trajectory that we're on right now.
Wow, historic times. Eric, great to talk with you. Thank you for all the information heading into the weekend. Can't wait to see what Monday brings here. And of course, a lot can happen between now and then, too. That's Eric Relph with Comstock Investments. You might want to give him a shout if you got more questions about the markets. That'll do it for this episode. Appreciate you joining us. For producer Brianne Jenkins, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.